149 trillion won, 7.7 trillion won, 8 consecutive days. Does Q3 day 1 mark a foreign buying reversal? It's Wednesday, July 1. Here's what today's story could mean for the Korean market. Our mission today is a sharp, brisk, data-dense deep dive into KOSPI positioning for active traders. And just to be completely clear up front, we are looking at flow dynamics only, so absolutely zero buy or sell advice here.
Right, pure positioning of flow data. Let's just jump right into the number.
Okay, so unpacking the first half of the year, foreigners unloaded, 149.4 trillion won. That is about 107 billion US dollars.
Yeah, I mean, it's a massive, massive outflow.
It really is. And they were mechanically trimming their top winners, right? Like Samsung Electronics saw 72.6 trillion won in outflows. That's 52 billion USD.
Exactly, and SK Hynix absorbed 57.1 trillion won, so about 41 billion USD.
Is this massive sell-off just mechanical pruning of a blooming garden?
I mean, yeah, it's basically mechanical profit-taking. But here's the crazy part. Retail investors and these massive AI-focused ETFs, they pretty much absorbed almost all of that selling pressure.
Right, really, just retail and ETFs.
Yeah. Retail took on roughly 99.2 trillion won, so, 71 billion USD. And at the exact same time, ETF assets hit an all-time 503.2 trillion won.
Oh, wow, that is huge.
Right. You have AI funds like Hanner Empfen posting a 288.95% return, and then SOL AI pulling in 6.1 trillion won, which is about 4.4 billion USD in fresh inflows.
So the retail side just absorbed the shock. But today, the policy framework shifts, right?
It does. The National Pension Service, the NPS, they actually reinstate their 20.8% domestic equity cap today.
Okay, and what does that actually do to the market ceiling?
Well, it caps the KOSPI upside by triggering roughly 74.4 trillion won, or 53 billion US dollars, in potential rolling average outflows right at the 9,000 threshold.
Wait, meaning 53 billion USD could just dump onto the market the second we hit 9,000?
No, and this is where, the mechanics are crucial for traders to understand. The NPS uses a rolling average calculation for compliance, not daily snapshots.
Yeah, I see.
Yeah, so instead of a massive single-session volatility spike, they look at the average weighting, and that structurally smooths out the rebalancing.
Right, that structural smoothing is really essential context. And speaking of structural shifts, NH Investment Securities just took action to handle this exact kind of flow environment, right? They launched a dual CEO structure with Shin Jae-wook and Bae Kwang-soo.
Exactly. Brokerages are restructuring to navigate this volatility, but the real corporate action that could disrupt these Q3 flows is actually happening at SK Hynix.
Oh, what's going on there?
They're facing a potential 10-day delay for their July 10 Nasdaq ADR listing.
Why the delay? I mean, they've been setting that up for a while now.
Right. Well, regulators are evaluating a 1,100 trillion won, so a 786 billion US dollar mega project amendment. Because of that massive scale, regulators just need time.
Okay, so how does this all tie back to our Q3 setup?
Recovering that 149 trillion won figure, yes, this mechanical exit implies Q3 day 1 opens a calendar-driven buying window. The next catalyst is July 6 for the SK Hynix ADR demand forecast to confirm if the mega project disclosure triggers a full 10-day regulatory reset. Finally, July 7 brings Samsung Electronics Q2 preliminary earnings to test if foreign buyers will actually reload into Korea's top caps.
Front-running these structural flow dates is vital for your active positioning. If you're trading the KOSPI, you need to know exactly when and why these institutional mechanics flip from selling to buying.
Which leaves us with this to ponder. If retail and passive ETFs absorb the massive H1 foreign exit, what happens to KOSPI volatility when domestic funds and returning foreign capital flow in the exact same direction?